Well, thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and let's try and analyze what the markets could do in the session today, right? We coming back after the break. So, to all our friends who are listening in, Eid Mubarak, whether you celebrated it yesterday or you're celebrating it today, I hope it ushers in a period of good health and peace going ahead. Let's take stock of what the world markets have done. And frankly, if you just look at what the markets did yesterday versus day before, is a big chalk and change difference, right? Because yesterday the markets did okay. There is a bit of a relief there, more so for the Dow and the S&P, but the Nasdaq to bounce back. But day before yesterday, it was really tough because of the inflation expectations. So that's the problem that happened with the US markets in trade that day. Now, because we were shut, maybe some of the other markets could have been, but because we were shut, our values would be slightly different. But get in Asia any which ways, just to see whether Asia is taking off from where the US markets left off. And you can say that some of the indices are doing that, not all. So it's a bit of a flattish performance for the Asian screen. Now remember, our markets, we shut at a level of about 14,696 or thereabouts, right, for the Nifty. So the SGX Nifty 14,662 or thereabouts is what it is indicating, which means that this 1% uptick is actually a slightly lower level from where we will start off. So we will not have a start which is really gung-ho. We'll have a start which is moderate. But I must tell you that considering what happened in the US markets in the preceding 2 days, I think people would take this start with both hands if you were bullish on the market. So that's the key point that you have to keep in mind. Now, it's also important to recount what happened in the markets that day, right, which is Wednesday. So this is the MOE function on the Bloomberg terminal, and it shows you the key movers. So again, there were enough gainers, but for a change, the market breadth was in favor of the declines. The last 4 or 5 sessions, the advanced decline ratio has been positive. Wednesday was the first session in 4 or 5 maybe, or maybe more, but in the market breadth was negative. So there were a few winners, right? GCPL and Godrej Industries obviously did well because of that management change. Vodafone Idea because of the subscription edition, etc. Alkyl Alliance and some of the stocks kept on doing well, but a bunch of others didn't. Dishman, Carbogen, Granules, the whole API space actually came off. SCI, despite Baltic Dry Index rate looking okay, came off. Metals came off. So that particular highly traded pocket certainly came off in trade. Now, I would think that despite the fact that we'll start off moderately sedate today, the risk reward is not in favor of taking leverage long positions from a bull's perspective. I don't know where you can go short currently because the markets are very choppy, but it is certainly not in favor of going long as yet. There will still be some time before that happens. And I think 32,000 on the Bank Nifty remains a key level for the support. Now, I've spoken about this to sound like a broken record, but frankly, we've maintained that all through, right? 32,000, 32,200, we haven't broken that. We're about 300, 400 points away from there. So if we defend that well, then that could be construed positively. Will that be under danger today because of results? No, not so, because I don't think we have too many banking names in the session today. So there is L&T, Cipla, and Dr. Reddy's, all of which are very important, more so Cipla and what they have to say about the commentary for Q1 because of Remdesivir and the inhaler portfolio. And Dr. Reddy's because of the whole vaccine drive that they are doing. And on the non-Nifty side, I think commentary from Escorts, very important. Macro tech developers or Lodha, the first quarter post listing, it will be important from their perspective. And after what Asian Paints or Kansai like did, it will be interesting to see what Indigo has to say, right? Asian is in a different orbit altogether, but some of the others are facing issues. It will be very interesting to see what Indigo Paints has to say as well for the first quarter post listing. So these are a few names and numbers that I think I'll be very keenly watching out for in the session today. Now, viewers, please keep in mind, there are a bunch of stocks that came out of the numbers. I've not been able to address a few. Now, before I get to individual stocks, I just want to mark one, which is UPL, which I thought was very good, right? The results stood out. The valuations are not that expensive. They've increased the guidance. So all of that is positive. While brokerages have been mixed about it, I would reckon that UPL could rally, but just keep in mind that the stock has had a bit of a rally behind it already, and therefore you have to be mindful of UPL. But that aside, and of course there's raw material cost pressure, but that aside, some of the other stocks that you should keep an eye out for, Asian Paints is certainly one. the volume growth was ahead of estimates. Now that the call is done, etc., there's better clarity. So the volume growth is ahead of estimates, but there is margin pressure visible in Q4 already. And I would presume that Q1 would have even more margin pressure, which is why Asian Paints took a price hike. If you remember, from 1st of May, Asian Paints has taken a price hike. But I still think that Q1 has issues for Asian Paints. So for a stock which is trading at about 65 times nearly, it would depend between 60 and 70 times depending on which brokerage you choose. But for a stock that is trading at about 65 times, I think you might want to consider or reconsider, whatever you call it, what could happen to Asian Paints. Now, you have to keep in mind, viewers, that there are a bunch of brokerages which have actually had mixed views here. So Credit Suisse, for example, they have maintained the outperform at a target price of 2,800. But but there are other brokerages, for example, I think Goldman Sachs on Asian Paints, they have maintained a sell rating with a target price of 1,691. But UBS is a buy rating with a target of 3,350. So it depends on which brokerage you follow, frankly, for Asian Paints. You might see a positive or negative view on your social media handles today. I just think there is a one simple trick to talk about Asian Paints. It's a marquee name. If it dips substantially because of the weakness around Q1, you could buy it. But the show has been exceptional. They're getting into adjacencies and they've done remarkably well all through. So you might want to consider that maybe Asian Paints might not be as bad a play as some of the others. So that's the point that I have on Asian Paints. Now, Tata Power came out of the Q4 numbers. Remember, the big problem with Tata Power is that the INVIT is no longer a reality, and therefore people will now view the stock without INVIT. But the numbers, and let's talk about the numbers for Tata Power. Well, revenues up 33%, net profit up 58% quarter on quarter. This is sequential that I've talked about because the last quarter, the last 15 days of May were a bit patchy, right? So you can't really compare year on year. But interesting set of numbers, margins at 14.3%. The point being that while FY21 has ended on a good note, so there's a CLSA note, viewers, on Tata Power, which says that FY21 has ended on a good note, with Q4 PAT recording a 16% uptick, but the delay in the reorganization due to COVID has led to higher taxes. And they are disappointed with the EBITDA down 5% YOY on the weak wind energy business. So that's the point. But they maintain, the target price is 127, if that helps. So I'm not quite sure as Tata Power could have a material reaction in the session today. Now, metals would be very, very interesting. There are multiple notes which have come out which say that the Indian steel prices are still at a discount to global, and therefore there is still upticks possible. But today, it's not just about steel. Today, it's about the non-steel businesses as well. So Vedanta came out with numbers wherein the profit optically doubled, but brokerages largely have maintained a neutral rating. There is Hindalco, wherein Novelis Q4 shipments were up 21%. EBITDA per ton was up about 9%. Management is guided for an EBITDA per ton for about $500 per ton, which is around the EBITDA per ton that they're maintaining currently. And the net debt to EBITDA is at about 2.9 times versus 3.8 times at the end of Q1 FY21, which shows how the management has repaid considerable amount of debt. And this could be viewed constructively, I think, for Hindalco. So this is one more stock that you should be watching out for. The reason I'm looking at the phone is because there are some brokerage notes that I have gotten which might help. So for example, JP Morgan maintains its overweight on Hindalco with a target price of 400. And they say that their guidance implies another year of debt reduction. This is the big thing, viewers. The interest cost for all of these companies, Tata Steel, Hindalco, will keep on coming off. And if that keeps on coming off, the bottom line performance will continue to be slightly better than the top line performance, which is great news. So Hindalco could actually have a positive reaction today. JSPL is the other one, right? Pretty strong Q4. The steel business clocked in the best ever EBITDA per ton at about 25,500, which is quite spectacular, really, for JSPL. So that is great news. And their debt reduction as well as fresh capex, to my mind at least, shows some fairly focused aggression on the part of the company. Not only are they going ahead with debt reduction, but they're also doing measured capex, which is actually a good sign. So let's wait and watch. Typically, doing commodity companies, when companies start announcing large capex, that typically signals the peak. but this time around it could be different. But this is good news for JSPL, could react positively to watch out. By the way, just speaking of numbers before I move to some of the others, keep in mind Lupin, I think most people are optically not too happy with what Lupin has done. So therefore do watch out, it could have a bit of a negative reaction today. Royal Enfield, they are temporarily halting the production at its manufacturing facilities in Chennai for 4 days over rising COVID-19 cases. But the company does not foresee any significant impact on its ability to cater to demand, which means the demand has come off. Do watch out for Royal Enfield. Equitas, they have come out with an update. They are saying that the lockdowns will impact the May collections. The April collection efficiency is about 105.16%. Keep in mind, this has implications for the entire small finance bank businesses and the microfinance companies. Collection efficiency may get impacted, and that is a problem for some of these. So do watch out for Equitas Small Finance in the session today. And then some stocks in focus. Granules, I remember, had a big negative candle, big short build-up, and there was some research done by alphaareas.in, which shows that the management, or whoever did it, but yeah, presumably the management, the con call transcript had wordings which were different from the commentary. That will not sit down well with people. So if Granules reacts negatively again today, you know why. Maybe the pain is in the price, but if it reacts negatively again today, it will show how the market seems to be disappointed with what Granules has done. It was a silly thing to do, at least from the looks of it. Orient Electric, very strong numbers. Prince Pipe, extremely strong numbers. EBITDA, revenue, PAT, up about 75%, 155%, and 244% respectively. That's a remarkable show by Prince Pipe. It's an expensive name. Systematic Shares and Stockbrokers, for example, says that despite this strong show, the target price is 625, which is just 50 rupees away, the 10% away. So it's run up quite a bit. It's a very strong show put up by them. It's a very strong show put up by Borosil Renewables, extremely strong show. So that's one more name that you might want to keep an eye out for. So on the mid-size in the end, a bunch of companies which have come on a good show, and despite the markets looking flattish, they may do well. So you have to keep them at the back of your mind. But the simple point is on UPL, Asian Paints, Pidilite, the three large names. UPL, the numbers were good, the commentary is great, but the stock has run up. And in Asian Paints and Pidilite, the brokerage views are completely divided down the middle. So you may want to consider whether they are great stocks to have in your portfolio. The question is only whether you want to buy them now, whether you want to buy them later if they fall. And the question is if they will fall at all or not. So that's the key thing. But watch out for the Bank Nifty, 32,000. Key thing, will start off slightly flattish today or maybe marginally lower today. The key is, can we bounce back from those levels if the global markets are looking okay? I think time will tell. Thanks so much for tuning in. Please stay safe. Please wear your masks.